All right, welcome. Today, we're basically putting on our detective hats. Our case, it's a single stock, ELPW, and it is so volatile. It has this incredibly dramatic story that's literally written in the data. So, we're going to sift through all the clues and try to figure out what on earth is going on here.
And that really is the central question of this whole mystery, isn't it? This isn't just some number on a screen. We're talking about a real financial roller coaster. How does a stock go from flying high to a crash this catastrophic? And maybe more importantly, what happens next? Let's follow the evidence.
So here's where our story starts, right at the peak. Just 3 months ago, ELPW was trading at $6.19. You can just imagine, for investors back then, this was the top of the mountain, a moment of peak optimism. Just remember this number. And then, this happened. The absolute bottom of the canyon. On August 20th, this stock didn't just fall, it completely cratered, plummeting to just over 40 cents a share. I mean, that's a drop of over 90%. This right here is the scene of the crime, the financial collapse that kicks off our entire investigation.
Okay, so first things first, every good detective needs a map of the crime scene. Before we start looking for clues, let's just lay out a clear timeline of the key moments in LPLW's, well, very wild ride.
You know, our timeline is short, but wow, is it eventful. We see that high at 619, which honestly feels like a distant memory now. Then, that shocking crash on August 20th down to 40 cents. But here's what's really interesting, this little blip of hope on October 3rd, a recovery attempt to 49 cents. Now, it's a small move, sure, but it shows there's still a fight happening. This is the battlefield we're analyzing.
Now, any good investigation starts with the most direct evidence you can find. For us, that means looking at the relationship between the stock's price and just how many shares were being traded. This is where we're going to find our very first clues.
And would you look at this? On the day of the crash, nearly 50 million shares traded hands, a huge number. But on that little recovery day, a staggering 108 million shares. So what does that tell us? It tells us these aren't just quiet background movements. Oh no, these are loud, high-traffic events signaling a massive, concentrated interest from the market. Something big is happening here.
You know, to really understand where our price is headed, you need a tool to see past all that daily noise. And that tool is called moving averages. The best way to think about them is like this. They smooth out a really bumpy road to show you the general direction you're traveling, whether that's over the last 5 days or the last 200.
And of course, when we apply this tool, our mystery just gets deeper. The current price has actually managed to climb above its short-term trends. That's the 5-day and 20-day averages. And that's a sign of recent strength. But it is still leagues below its long-term 50-day and 200-day averages, which are sitting way, way up there over $1. It's kind of like the patient is showing signs of life, but they are definitely still in the ICU.
So this right here brings us to the central conflict of our case. The stock is showing some real signs of a comeback. It's fighting to get off the mat. But that long shadow of its past, that really powerful long-term downward trend, is still looming large. It's a battle between recent optimism and a very harsh historical reality.
Okay, let's move on to our next set of evidence and see how this all builds. We're now going to look at momentum indicators. So if the price tells us where the stock is, these indicators, well, they tell us how fast it's getting there and in which direction. Think of them as the speedometer and the compass for our investigation.
And oh boy, this is where the clues get really contradictory. On one hand, we have some solid bullish signals. The MACD, which tracks momentum, is showing a positive crossover. The ADX, which measures trend strength, suggests a strong uptrend is forming. But, on the other hand, the price is literally breaking outside of its normal trading range, the Bollinger Bands. And another indicator, the CCI, is basically screaming that the stock is overbought. That means it might have gone up way too far, way too fast.
So if we try to put it all together, our indicator verdict is a hung jury. Some of the evidence is pointing to buy, some is pointing to sell, and some, like the RSI, which measures if a stock is overvalued or undervalued, are sitting right smack in the middle, signaling neutral. The data is pulling us in totally different directions all at once.
So with all these conflicting clues, how do we possibly move forward with this thing? Well, we have to zoom out. We need to look at the biggest picture possible to see if this recent chaos is just a blip or if it's part of a much, much larger pattern. So, how do analysts do that? They use something called linear regression.
And look, it's a fancy term, but it really just means drawing the single best fitting straight line through all of the historical price data. This line shows us the stock's expected path based on its entire history.
And here it is, our bombshell piece of evidence. The one clue that kind of changes everything. The current price isn't just a little bit off its historical path, it is nearly 700% away from where it should be based on its long-term trend. This number right here confirms that what we're seeing isn't just volatility, it is a massive historic deviation from the norm. So when we lay all the clues out on the table, this is the chaotic picture we get. We've got extreme volatility, and it's being fueled by massive trading volume on key days. We have this messy fight between technical indicators pointing in every direction. And at the very heart of it, you have this powerful recent surge of momentum that's trying to fight against a much larger long-term downtrend. It really is a perfect storm of conflicting information.
And this leads us to the investigator's final verdict, taken directly from the source analysis. With this much uncertainty, with this much conflict in the evidence, the primary takeaway has to be caution. The situation is just too unpredictable to make a confident move right now.
But wait, our investigation isn't quite over yet. Based on all of this evidence, we can now start to outline the most likely scenarios for what could happen next. Where does the LPW go from here? Well, the analysis points to 3 potential paths.
So what are the 3 possible futures? First, you've got the bullish breakout. The recent optimism wins the day and the price actually pushes past that resistance and heads towards the 60-cent mark. Second, there's the bearish pullback. Gravity reasserts itself, traders who bought at the bottom decide to take their profits, and the price slides back down toward the 40-cent range. And third, you have the neutral path. The bulls and the bears just fight to a standstill, and the stock churns sideways as the market tries to make sense of all this chaos.
Ultimately, while all 3 scenarios are possible, the balance of evidence seems to suggest the stock will likely trade sideways for a bit, but maybe with a slight upward bias. That recent positive momentum, it does give it an edge. But the overwhelming uncertainty and the ghost of its long-term downtrend will probably keep it locked in this financial tug-of-war.
And this leaves us with our final, big question. When the data is telling you everything at once, up, down, and sideways, it creates a total storm of signals. In that kind of environment, where every direction seems both right and wrong at the same time, maybe the most intelligent move is to not move at all. So, in a storm of mixed signals, is caution the only true guide? That's the mystery of ELPW.